Hey Shackers, it's Asif Khan, CEO, Editor-in-Chief of ShackNews.com, here with another Game Trader video. I'm going to look at some charts, as it's the end of the quarter. I think it's a good time of year to look back and, see how some of my picks are doing, maybe some of my fundamental picks, and also see how the overall market is doing, given a lot of news lately, be it tariffs or other things. You got CEOs of car companies that are maybe smoking marijuana and then tweeting about taking the stock private at $420. But yeah, we are going to focus on tech and gaming stocks here. I have like a universe over here that I like to say of our game trader stocks. They're mainly traded in the U.S. because most of my viewers are based in the U.S. So in the case like Nintendo or SNE, Sony, I'm going to be talking about the U.S. stocks and not doing technical analysis of their Japanese counterparts. But maybe in the future I'll do that too. So yeah, the SPY ended the quarter, inside quarter, and up. See, it had this very volatile first quarter of the year. Second quarter of the year, we traded inside the previous quarter's range. And then we resolved that to the upside, basically slowly throughout the quarter. You can look at it on a weekly. So, we started, and it's just kind of been chugging along. And you could argue that a lot of the S&P's move has been due to Apple, one of the largest companies in it. Which has gone from, at the beginning of the quarter, I guess it was around 180, and it's currently at 225. So, what's going on with Apple? Well, it keeps going up. It's the stock that just keeps going up. It's been going up for a long time. It splits, it splits, it splits, it splits. Start paying a dividend somewhere around here, and it keeps going up. They're the largest company in the world. I kind of predicted this if you kept reading some of my articles. So, virtual pat on my back. And it's basically I sold the majority of my shares around here. I think somewhere around here, yeah. And I bought calls at that time. You can follow along in our articles on ShackNews.com. And I've just kind of been riding it through call positions at this point. I currently have 240 strike calls that expire in January of 2020. And it's $15 away already, and I'm kind of like, well, this seems ahead of schedule. But like I said, if you look at Apple and you look at the market, S&P 500, they were definitely, let's look at it on like a weekly. Since Apple's big move, the S&P's gone from, or the SPY's gone from, 270 to 290. And being a market cap weighted index, that matters because the larger companies are going to influence the average move in the market more than the smaller ones. That's kind of how it's designed. The Dow Jones is the opposite, or it's not really opposite. It's all based on the share price. But yeah, Apple's doing really good. They end the quarter without any signals really. There's the weekly, it was just up. It looks like people are buying the new phones. It looks like people are happy with the new phones. The Apple Watch is doing really well. You got just, like I said, ridiculous looking chart. Let's move on to another stock that has been really kicking butt in the last quarter or two, if you want to say. So, AMD. Okay, I think the last time I talked about the technicals, it was probably around here. I'd have to go back and watch the previous video, which I didn't before recording this. But yeah, you had a stock that went inside to start the year, right? It had a huge range in the fourth quarter of last year. 1441 was the high, 970 was the low. Next quarter, leading into the end of March, it traded between 979 and 1385. Then it breaks down below it and then comes back above it. If you look on the weekly chart, you have a stock that's now in the quarter dropped below the previous range, and by the end of it ended up above it, and then kind of came back within it. So that's what let's see, it's a quarterly that we're looking at. This is an outside quarter off of an inside quarter. So you've attempted to reach equilibrium. You went below it, and everyone decided, you know what, AMD was too cheap down here below $10, and they bought it up all the way above the previous range. This was very bullish. And then the next quarter, I mean, just look at this. It went from, it opened the quarter at 1478, it closed it at 3089, and it hit a high of 3414. Anyone who's been long this, congratulations. I know people that were buying it down here. You know, you could have had an inside quarter in 2009, you know, and held it for years, and it's been frustrating if you're a long-term shareholder of this stock, I'm sure. But people who bought in like 2016 or even 13, you gotta be feeling pretty good right now. But you know, it's funny looking at it on a quarterly chart that dates back 10 years to give people a frame of reference of this move, the magnitude of this last quarter. You're reaching back to levels that you haven't seen since 2006. But I would point out that there's a high that was set in 2000, followed by a lower high in 2006. And it's just, we'll see. There's a potential downtrend here. But you know what? I commend AMD on their abilities to survive. It's been a very long run for them as being kind of second best to Intel, and then second best to Nvidia now. But yeah, this is a massive move. If you take profits here, I don't think that's a bad idea. Especially if you bought it below $5, if you haven't sold half of your money, you're kind of crazy. You should I understand the concept of letting it ride, but maybe take some of it out, at least your original investment. But you know, congratulations, and maybe don't listen to me because I've been talking smack about this stock for a while. You know, I said, like, I've never been compelled to buy it, and now when I see it have this kind of return in 2 years, I'm like, oh, I could have gone for that. I like 10xers in 2 years. So congratulations, everybody. And as long as it's staying above these, if it can get above 34.14, it's just giddy up, as some folks would say, and then really holding above the previous month or quarter. It seems likely that the stock will trade within a range based on this massive quarter, even this massive month. So just pay attention for an inside month signal or an inside week signal. Like we had, you know, right now we had inside week and outside week. So we'll see what happens next week. You know, these are the thing about this strategy is I'm only going to react to what happens. So if it breaks down below this level, 29.98, maybe I would sell it if I was long, and above 31.08, that would be, or sorry, 33.60. That would be a place to buy it as a long trade if you just want to trade this stock. Because, you know, I guess visually $30 is still not that expensive relative to a share of Apple, right? That's $225. But share price is meaningless. Let's talk about another stock that joined the $1 trillion club in the last quarter. Amazon. I don't know if they're currently at $1 trillion or not, but I think they're the second company to hit it. Yeah, they're slightly below it right now, but whatever. I think on this day, at 20.50 and 50 cents, they were $1 trillion company. So now there's two companies. We have two $1 trillion horsemen, and I think we have one right here and one right here coming, Google and Microsoft. Amazon, you had an outside week going into the end of the quarter. It didn't really do a whole lot in the last month. It did drop, and then it rallied. Quarterly chart's amazing. This stock's also just awesome. If you bought and held this stock at any point, you've probably made a good amount of money. It's definitely more expensive, but like I said, this is just technical analysis, so we're not looking at value of companies. We're just looking at where they're going. And right now, it looks like Amazon's going up. They have the NFL deal. They're doing stuff with Prime Video. That Whole Foods acquisition's actually been accretive for them. So interesting times at this company, and Jeff Bezos is one of those visionary tech guys that I think you kind of have to set and forget with those folks. Let's check out our good friends at Activision Blizzard. They have a game called Call of Duty Black Ops 4 coming out. I don't know if you've heard of it. And they actually released a really cool WoW expansion over at Blizzard. And I think they've picked up some subs. We'll find out soon. I have friends that have gone back to WoW recently, and they're still doing their Overwatch League. They announced some more teams there, and they're selling them, so they're definitely making money off of Overwatch League, which is amazing. So yeah, this company is doing really well financially. Their quarter was solid. It went inside quarter and up. So this was a nice actionable signal above. Let's see, a high of 79.25, and yeah, you could have made about $4 on that trade, which isn't bad at all. And if it stays above this area, just keep trucking with it. I think they have a strong lineup going into the end of the year, compared to our next guest, Electronic Arts. Interesting chart. Here's why. You have an outside quarter, right? That looks rather that could be interesting. You also had an outside month and down, so we could have like kind of two actionable signals kind of hit within 3 months of each other. With the quarterly signal, it takes 3 months for something to appear, so a longer term trend might appear in something like a monthly chart first. So yeah, you had an outside month and down. It's hanging out down here at around 120. But yeah, you have an actionable signal to sell EA. And granted, it's kind of low from here. It's below 110 and 53 cents is where you would have an actionable signal to sell it. I don't think this stock is really that cheap. Like I said, this is not... I will have like a longer form financial analysis piece where I look at individual stocks fundamentals. This video, I'm just looking at the chart, and I just think it's kind of an interesting setup to pay attention to. Now, on the other side, if it gets above 151.26, you have an actionable buy signal. That's what's interesting, is that this is quite the opposite of equilibrium right now. You instantly have a new trading range here that is a broadening formation. So when you have like a new trading range that you can attack, you have very defined stops, and you know when it's working, it's working. If this thing breaks, it can go a lot lower. I mean, look how much these stocks have gone up in 6 years. This was a $10.77 stock in 2012. It doesn't seem like Battlefield's pre-order numbers have been anything to write home about, and I think that was part of why the stock has dropped. So like I said, with the one side, Activision with COD Blops 4, and how it's shaping up to be a pretty big game. EA, they have Madden, they have FIFA, but it's really the outliers like the DICE games or whatever else they're working on. Anthem, which is coming. There's other things down the pipe that might be able to help them grow revenue. But I think in some years, Madden and FIFA are not good enough for the shareholders to be happy, and at this point, I think it's just... I would pay attention to this one. I'm actually gonna say I'm putting a stock on notice here. I might have to be downgrading this stock in the near future, but Facebook, they're just the worst company. But yeah, the stock hit an all-time high in the last quarter of 218.62 cents. It's down considerably since then, on all sorts of terrible news. They keep doing terrible things. We'll see when it'll all catch up to them. You had an inside month and down signal last month to end the quarter, and that was off of an outside month. So you had an outside month in which it hit its all-time high, then an inside month, and then it went down again. So we keep hitting them if they drop below 158.87 cents. In full disclosure, I own puts in Facebook. I'm losing on them because the stock keeps going up, but I am short this stock through put options and I can disclose that in the article in the video or whatever. And I'm also long Apple. We'll get to that at the end. But yeah, I think this is the ultimate short against anything I would recommend someone to buy. I think this is a fine short, and especially on days where the market's going down, which I'll get to the cues in a second. Yeah, there's some interesting setups here. Just keep watching. You know, you can look at the weekly. If we get an inside week to start the month, it had a failed reversal off of an inside week. It tried to get back up, and it just went right back into this range. So this 165 to 158 area, just pay attention to it. And I think we'll either find equilibrium and it'll resolve to the upside because their revenue growth is so great or whatever, or they'll continue to just annoy their users and really draw the ire of regulation, and that could stymie them. There's no signal on their quarterly chart, but they do have, like I said, a possible continuation of an inside month and down signal. Or sorry, yeah, outside, inside, and down. So it's just volatile. This is a volatile thing to occur, and it looks, I don't know, that ascension is just insane. And a correction just due to how they've been behaving is not that crazy. And Washington loves to regulate stuff. The last time we had a solid monthly signal, it was an inside month and up, and you could have made, solid, probably about $30-$20 on it. So the way this stock's moving, it's a massive company. I think its market cap is, let's see, it is $474 billion. So it can be a source of funds if market's correct. I think if the Qs go down or if the S&P's going down, Facebook's going to definitely go down with them, and it's a very liquid stock to be betting against. So yeah, out of all the stocks that I'm covering, this is the one that on down days I would be looking to short. And I just don't think I think their user statistics are going to start to disappoint. Their daily active users did on the last quarter. We'll see what happens with monthly active users going forward. But like I said, I should have a fundamental research update on this where I will be downgrading it. Speaking of garbage, GameStop. Oof, look at this stock. Yikes. It's hanging in here. It's got this long-term downtrend, right? So, let's see. You had an inside month and down, and then it couldn't stay inside the previous month. So we have no equilibrium is being reached here. All sorts of rumors about potential acquisitions. So here's the warning sign for longs, which I am long because I'm a big dummy. I own shares of this. It went inside quarter. Right, so you had 20.31, 12.20 was the low, and the next quarter was 12.26, so it barely stayed in. And now you've reversed back into this range. So one of two things can happen. Either this is not going to be a reversal signal and it won't break down below this, or it will break down below 13.08 and most likely go to $12 or even lower. So we'll see what happens here. The stock is in a really weird place as they're in the middle of a transition to strategy. They have a new CEO in there again. They've brought in people that are known for selling, so a lot of the chatter on Wall Street is that they will be acquired. You can see it's just had very volatile weeks where 1 week they're not getting acquired. I think this was when they reported earnings, and then the next week they had rebounded pretty solidly. The stock is it's still there. AMD, just remember there was a time where AMD looked this terrible, now I'm not saying they're the same stock. Clearly one's a retailer. Everyone thinks retail is dead, and you have stocks like Amazon hitting all-time highs. We have GameStop hitting really multi-year lows at the very least. But yeah, I think that if it can hold out above this 1308 area, there's no reason to sell it yet. I've been paid a few dividends since I acquired these shares, and it's not that bad. It's trading below book value. It's another fundamental reason why I like it. But yeah, on a technical reason, all I can say is that there's a warning sign, and below 1308, that's when it's triggered to sell. It has a huge short interest, so you'll see a lot of news chatter going back and forth, a lot of seeking alpha articles out there that don't really tell you anything useful about this company. I would try to avoid the chatter and just look at the fundamentals and pay attention to these risk levels that I mentioned. And if it can get above the previous month's high, maybe there's some kind of new uptrend that we can actually discuss. But it's hard for me to look at this chart and try to convince anyone of an uptrend. And I don't think anyone should see that. We're just going to look for more actionable signals. Like I said, the monthly, there's no equilibrium being had. It's just very volatile. The stock has gotten to be more volatile with the rumors of a takeover by Sycamore Partners. You did have an inside weekend down last week to end the quarter. That was after a massive... was that outside? Yes, it was outside by 3 cents. So you had an outside weekend up followed by an inside weekend down. So like I said, it's a volatile stock. Still in it. And there is this long-term downtrend to pay attention to. And it's bounced off of this several times to nice degrees. But trends are trends until they're not, right? So that's how we'll have to look at this going forward. Like I said, the daily chart is a roller coaster. You have inside and down, you have down, 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 outside and up, inside, outside, inside, reversal, failed reversal, up. It's just a nightmare. So don't trade this. If you're going to invest in this with me, just buy the shares and curl up and cry about it with me. But yeah, it's really difficult to trade this. I wouldn't recommend anyone trying to trade options in this or anything. But yeah, so you do have a potential quarterly reversal strat to the downside. As you can see, it went above and came back into the previous range, which was inside of that previous range. So that's a potential reversal. Below this, 1308, the downside, in my opinion, would probably be around $12 if that happens. And then we'll see. But like I said, we're not trying to predict anything. I'm just saying where the risk level is. So I would sell it. I'm not actually going to do that, but that would be a sell signal, I should say, below 1308. And these are quarterly signals, so just pay attention to them for the next 3 months. Google. Just a mighty fine stock right here. I wish I owned it. I don't own it. Potential reversal strategy to the upside. Big old month in July, followed by an inside August, followed by a reversal back into the range. So watch Google on the monthly chart above 1227.87. You would have a buy signal, and it would be a month-long signal. Had an outside week. Oh boy, look at this. Inside, outside, outside. Yeah, something's about to happen over there at Google. Either direction, right? You clearly have a new risk range forming, at least on a short-term trading basis. But like I said, a monthly potential buy signal. That's about all I see on Google. I guess the thing to pay attention is in this next quarter, they will have their release, hopefully, of some new Google Pixel phone. So that might cause some excitement around the stock, especially if they sell well. Intel. Oh boy. Intel is not looking as good as it did last time we took a peek at it. It's been on this steady uptrend, but then it had an outside month and down. Tried to stay inside, but no equilibrium has been found since this outside month and down. On the weekly, it looks fine. You know, and a lot of these stocks have kind of been trading with the Nasdaq, the broader index lately. So, you know, they have a news event, they react negatively or positively to them, and then they just kind of are in purgatory for a few months. Kind of like this one. But no. Yeah, they're a fine company. They pay a nice dividend. I don't know. When you have returns like this in another semiconductor company, an AMD, it's hard to want to buy Intel for the dividend. Also, just the amount of potential upside to AMD versus Intel, which I never thought I'd be talking about, but here we are. Then there's another chip company that we'll get to in a second. Intel is Intel. I don't really have any ranges to pay attention to, no actionable signals to really pay attention to on the long term. Like I said, I'm kind of focusing on the long term in these videos. You can look for daily signals. You had an inside day and up to end the quarter. But unless you're a day trader, like, I don't know why you would be paying attention to that. If you're an investor and you just want to kind of keep an eye on a technical eye on your stocks, I think looking at monthly charts and quarterly charts for inside, outside, and trends. Microsoft. Wow. Look at this guy. Or gal. This spaceship. All of those splits. 114 a share. Ending the quarter at an all-time quarterly high. Hitting an all-time high of 115.29 per share. Just amazing. How big are they? They're 877 billion. So I think they're in third place or fourth place in the $1 trillion race. So they have Google ahead of them, and maybe an Amazon and an Apple. But I think they'll get there eventually. They're a fine company. There's really no quarterly signal to talk about other than just like, oh my God, look at that. Oh, that's nice. 1, 2, 3, 4, 5, 6, 7, 8, 9 straight quarters in a row. Stock's been going up. Happy shareholders. Monthly chart looks good. Not staying inside, just kind of moving up with the market. Kind of like Apple's chart. Which is funny. Weekly chart. It ends the quarter on an inside week. So you do have some signals to watch going into this first trading week of the quarter. Below 112 and 22 cents and above 115.10. Either way would be a trading signal on the week. So that by the end of Friday, you would be out of that trading signal. And if it reverses back in, you get out. So you have to find stops where you got in and out. Usually when these trades work, they just work. So if they're not working, get out, and you can just get back in some other time. But like I said, that's day trading, not investing. On the monthly chart, like I said, it just looks great. Congratulations to anyone who's been holding this for any period of time. But also, after Ballmer exited, when the stock shot up to the 30s, that was a great entry point. You could have tripled your money. Let's talk about a stock that has been not so kind to us this year. Our friends at Nintendo. They started the year with a solid quarter. You know, the Switch has sold a ton of units. By now, probably more than 20 million units. Has had no equilibrium on the quarters. On the monthly chart, you had an inside month reversal strategy down, and then it just did not stay inside. So you could have just kept riding this signal as your stop, 54.21, and just shorted and shorted and shorted and shorted and shorted and shorted. So, you know, there's still people out there that are short Nintendo, I guess, mainly through the Japanese stock. And the only thing I can say is that you have an outside month that kind of looks like a hammer, and up to end the quarter. 45.25 was the previous high. The new high is 46.85. So if it continues above that, I think you can see some good momentum. The weekly chart is all over the place. this stock does not really find itself trading in equilibrium very often. There was a lot of fears about what would you say, the Nintendo Switch Online release sucking. If you look in the chart, this is the day before release. It was at 42.50. It closed at 42.73. The next day on the release of it, it was already up about $1, closing at 44.12. And by the end of the week, it was sitting there at 46.42. So if the biggest risk in owning Nintendo stock was Nintendo Switch Online, you can look basically to the day. It didn't go inside day. It just gapped up and gapped up and gapped up and inside, and then it's just kind of gonna digest this move, which is finally some positive traction in a stock that's really been, if you look at it, a dog for most of the year. It was, you had an inside month, right? You had one good month, and then 1, 2, 3, 4, 5 straight red months. On the monthly, yeah, you did have an outside month and up. Sorry, so that's one thing that we got this month, and it was to end the quarter. It didn't really happen until the second half of September. So, you know, this is a stock that I'm long. I'm going to stay long. It's a core position for me. I tend to hold stocks for a very long period of time. I want to see Nintendo monetize their assets better than they currently are. Ended the quarter on an inside week after that big week where Nintendo Switch Online launched. But yeah, I think it can get back. We can see it try to attack the 50s again if they get some more positive news going into the end of the year. And now you kind of have a nice little uptrend to ride. You know, after this, you know, we had a solid. Yeah, we're at an interesting point. I'll just say that much, because you could argue there's still a downtrend forming. So yeah, just pay attention to where this weekly goes. I don't know if you're insane and you want to trade Nintendo on a weekly basis, which I don't do. I just buy and hold it. But yeah, above 46.30 would be a buy on the week, ending on Friday, and then below 45.30 would be a sell signal. So there's definitely a trade to be had, and just even if you're not going to trade, even if you're just investing in Nintendo, just risk levels to pay attention to. So at least you'll know, okay, well, at least that's why I know it's going down. Now you can believe in equilibrium breaks or not, but I think it's pretty sound. You'll notice I don't really use, I use trend lines, I use inside and outside bars, and I also look at time frame continuity. I look at things across multiple time frames for confirmation or conflicting signals. But when you have something that's a buy on the month, on the quarter, the month, the week, the day, all the way down to the second, you know it's going up, so it's a really easy trade to make. So that's why I look for that. But yeah, Nintendo is not that stock. It's been all over the place. And yeah, I think if you're patient, you know, these things tend to happen. When you have a stock that goes from 25 to 58 in a year, some consolidation is pretty natural. So if that's what we had, and now we're rebuilding some sort of a base, let the financial news play out. But I think Nintendo's a great long-term hold. Another great long-term hold is Nvidia. Oh my god, I'm such a dummy. I bought this for like $10 back in 2010 or something. I sold them for 20. It's like, oh, I've doubled my money. Look at this. Oh my god, I'm a dummy. I've traded in and out of it a few times this year just because it's volatile as all heck. But yeah, it's hanging out at near all-time highs. You had an inside week. Yeah, you had an outside week. You had an outside week, outside week, outside week. inside week, followed by an outside week. It's just very volatile. This is not an easy stock to own right now. Not really finding equilibrium. But when the market's going up, you better bet Nvidia is going to be going up. And it's one of the better stocks to own. It's best of breed, so why not own it? It looks great. The chart is great. If the Nasdaq's going to keep going higher, I think Nvidia will. If something like the SMH is not going higher, Nvidia might get hurt with it since it's such a large component of it. So the SMH is inside quarter. This is something to pay attention to. If it breaks below 190, now for people who don't know, the SMH is just a ETF that represents the S&P Semiconductor Index or sub indice. But you have two inside quarters in a row, and Nvidia and Intel and AMD are all part of this ETF. So when this thing goes down, they can go down with it. Below $100.90 would be a sell signal, and above 109.87 would be a buy signal. So this is quite the opposite of Nvidia's chart, which can't find a way to stay inside. This is, and you look at AMD, right? At a time where AMD is going through the roof, Nvidia's, killing it. You have Intel kind of churning around. A lot of other smaller semiconductor companies have had really rough months. If you look at Micron, was down on the quarter. There's a ton. I think Skyworks was down multiple quarters in a row. So you have a lot of semiconductor companies that have had rough years or rough couple of months. Qualcomm's bouncing back. But yeah, so SMH is an interesting instrument to watch because it tries to mimic the whole semiconductor industry as a whole. And based on the recent quarters, it seems like the solid state companies and some of the chip fabs are seeing some slowing of demand, or at least I should not say slowing of demand. It's just more supply demand balances being reached, so prices dropping. Whereas there was shortages of NAND for a while. And that drove prices up for companies like Apple or Google or whoever's making stuff for these companies. It's just something to watch. But yeah, I think it's interesting that it's been inside quarter at a time where you have AMD going through the roof and Nvidia doing very well. It's just a disconnect that I think is worth noting, and why I enjoy owning individual stocks versus indices or sectors. Look at Sony. I'm just gonna say this is the Spider-Man quarter. No, I don't know. They're doing well across the board. It's hard for me to say anything bad about this stock. It's done extremely well off of its low. It was below $10 in 2012, and now they're back above 60. It's the highest it's been. Oh man. Since 2001. So that's great. So congratulations to them, all the shareholders, and anyone who's stuck with it that long. Bless you. It's a hell of a ride, right? Monthly chart, not a whole lot to see here. Just they had a solid quarter. Stock went up on that news. Looking pretty good, pretty much on every time frame. Let's skip on to a stock that's not looking good, and I don't own. How about that? Tencent. Oof. Only thing here was that outside month, and down and down and down. It's just been going down, and they just had news that they're restructuring, so this could continue to go lower. They're a great company, but they're based out in China, so I don't really trust many financial statements out of companies that are based in China. That's just my own bias, but they own a lot of things that I like. They own Riot Games, they own Epic Games, so I think they're probably one of the largest companies in China. And there's just that market has been hit as a whole, and then on top of that, the video game division of Tencent has been hit by the new minister. Or there's like a new bureaucracy within the Chinese government about video game regulation, and that has kind of halted the release of some games. It affected their platform that they were trying to compete with Steam. So yeah, this hit them at a weird time. Video gaming revenue is not a huge part of their stock, so I don't think that's the only thing going on there. But yeah, this stock is down a ton from its all-time high of 61. It's down here at 40 and 84 cents, and it's a stock that I added to the universe because, hey, they own Riot and Epic Games, and I think they own parts of other companies. I'd have to look it up, but Tencent's a really interesting company, and we should start paying attention to it. It ended the quarter on an inside week, and it's just been a kind of a slaughter on the monthly and the quarterly this year. But yeah, it's just going down. In my professional opinion, it's going down. But you know, you could have, maybe we saw some of a bottom here, and for the most brave investors, maybe this is even a buying opportunity. But that looks scary. I'll wait until I actually have any kind of confirmation of even a short-term buy signal before I would alert anyone to this. But I think given that it's been beaten down so much, and you know, like I find value in a stock like Apple or Nintendo that got killed in the past, and you know, like Apple gets hit from time to time. You know, good stocks go through these bear markets, which a drop of this magnitude would definitely qualify. So yeah, pay attention to it, but there's no signals. Maybe it can, if it gets inside in the next month or inside in the next week. I think it had ended on an inside week, so you could maybe buy it. You would sell it below 40 and 63 cents, and you would buy it above 42 and 15. So there's that. Take Two, they got that Red Dead coming. Yeah, outside, inside, failed reversal strat. It's just all over the place. All I'll tell you is that I've held this stock in the past leading up to Rockstar releases, and sometimes the stock will sell off even on an amazing report. So we'll see. I don't know. It's tough to... If Red Dead ends up being like another GTA 5, then yeah, the stock will probably go higher. But I don't think anyone's expecting that, so we'll just have to wait and see. It had an inside week and up signal that just ended at the end of the week. It did not have an inside month. It had an outside month and then kind of closed within that range. There's really, I have no reason to buy it or sell it up here. But I would just caution people who are buying it now for Red Dead when you could have bought it below 100 and it's at 137.99 cents right now. Yeah, so just kind of be careful. Zynga, the stock continues to exist. Ends inside quarter. And I guess they had some decent financial news lately because the stock's not at 0, it's at 4. But yeah, you had a stock that got above, I guess they got above $15 at one point. And yeah, I don't know. Tough times for anyone that was working there that was paid in shares of this. But yeah, there's an inside quarter to watch. So if you really, for those bottom pickers in you, if you want to sell this stock below 365 on the quarter and above 443 on the quarter, you would have a buy signal. So that's the risk range for the next quarter on Zynga, if you really want to do that to yourself. Monthly, there's no actionable signal. Outside week to end the quarter, so I guess pay attention to 385 on the downside and 409 on the upside. So that's Zynga. I just want to take a quick look at the S&P 500 before we end this here video. I appreciate you guys watching this. I didn't realize it was going to be this long. I hope you guys enjoyed it. I just got back from Japan this weekend and figured I would record something for you folks because it's been a while since I took a look at the market, and the beginning of the quarter is an exciting time to do that. So You have the S&P, the SPY is an ETF that mimics the S&P 500. It had an inside quarter and up buy signal that just ended. So that's pretty great. It ended, yeah, on the monthly chart looking pretty decent. So, we're near all-time highs. Nothing to really be too worried about. It did have an inside week to end the quarter. But yeah, the SPY is looking pretty good based on, this beginning of the year, which was very, very vicious corrections, followed by a slow kind of comeback. It feels like this market is just going higher. I hate when people say how the market feels, but you have an inside week now to watch. But if you just look at the monthly, things are we hit an all-time high last month. You don't always do that, so it's definitely better than most months. And then above 293.94, clearly the all-time high. I think it's going to continue to go higher. It's not that crazy to say, but just look at this. We're coming up on the anniversary of the financial crisis, right? This quarter right here. And if you just look at how far we've come from the bottom of 09, where it was 67 to 290, it's really impressive. And I think the Nasdaq, to put it into context, I don't normally use Fibonacci retracements, but when I do, I use it on the Qs. No, I'm just... The 2000 to 2003 bear market, right? The massive correction that occurred where the Qs went from 120.50 cents down to $19.76. I just drew a retracement of that. And when you do that, it shows you the inverse, which would be a 61.8% gain from the all-time high of 2000. Well, we hit that last quarter. We're above it right now, whatever. I don't really, like I said, I just kind of put these here. But if you look at them throughout history, they tend to be kind of areas where we run into resistance, at the very least, or they become support levels. But yeah, this is an interesting point to make, that the Qs, if you were the brave soul that held them from the peak, you bought them on the worst possible day in 2000, and you held them to now, you've returned 61.8%, or a little bit, or close to that. It's just an interesting thing that I noticed on the Qs. And most of these stocks, these bigger ones, Apple, Amazon, Facebook, I think EA, Google definitely is, Microsoft, Nvidia, they're all part of the Qs. So this is another important ETF to pay attention to. And it on the monthly went inside. So you have a low of 180.44 to pay attention to, and a high of 186.49. Above that, you want to get in from a long perspective. You want to take more risk in tech, maybe. And below that, that the market could pull down some of your favorite tech stocks. So if you see Apple down $6, like, why is Apple down? And you see the Qs below 180.44 cents, you gotta be like, you know what? Asif told me that this would happen. It's just, that's the nature of the market. When you have these big companies like Apple that really are a large component of the market weight the market cap weighted indices, it'll move with the market. If the market's going down, Apple goes down. If Apple's going down, the market might go down. It's weird how we're becoming beholden to very, very large companies that are moving around the markets, whereas a smaller company like GameStop, which is not even a $2 billion market cap, really has very little consequence on where the market's going. It's not as correlated right now. It's not even part of the S&P 500. And Nintendo, in a sense, also, it's not as big as these trillion-dollar companies. I think they're around a 45 billion market cap right now. They don't trade on a major, any kind of major index, so they're not real. They're kind of an outlier as well. In times where correlations go to 1, it's nice to own stocks like that. So I will have a fundamental research piece out. I don't know when. They take forever to do. I'm going to try to get it done in a reasonable amount of time to help you folks. But yeah, if you paid attention, I'm not really feeling Facebook right now. I think that would be the most likely thing from our previous ratings to be downgraded. I'm still long things like GameStop and Apple and Nintendo Apple through options and some shares in my retirement account. I'm currently not in Nvidia because I'm a dummy. I mean, look at this. And but yeah, I think Facebook is a stock that on bad days where the Qs are down, boy, is that it's a mighty fine punching bag for anyone who happens to be day trading on the short side. That's going to be my stance with it. And I think versus a lot of the stocks that you've seen me recommend, it's a good pairs trade. It's a nice way to hedge your exposure during the day. I'm not going home short any shares of that. I would, if I want to express a short opinion on a stock overnight, I'm going to buy options in it. I would buy put options in this case, which I did. And like I said, I'm losing money on them because the stock continues to go up, baffling most people. So we'll see. We'll see what happens here. I hope you guys paid attention and took some notes on my risk ranges. Hope I didn't ramble too long. I appreciate you watching these Game Trader videos. I'm going to leave it on a prettier looking stock. Let's put it back on Apple. They have iPhones. Hooray. And it seems like people are buying the watch. So appreciate you folks watching. If you have any questions, please hit me up on the article thread on the chatty or in the comment section on YouTube. Please like this video if you liked it, and if you didn't, go tweet at GregBurke85. And just a reminder, this is just to be used for educational purposes. If you're not someone who's really doing day trading, seek the help of like a professional advisor or maybe whoever else that would be versed in that kind of thing before you jump in. Message me if you have questions about that stuff. But yeah, I wouldn't recommend people jump in and start day trading if they have no experience. I don't want people to get that impression, but I just kind of want to show you from a professional's perspective what the technical setup has been, at least from my kind of strategy, which I learned from Rob Smith over at T3 Live. And yeah, we appreciate all the support of you folks. I'm going to probably go get some sleep. Go out there and do it for Shack News.